You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
What do Josh Hicks, the co-founder of Plated, Jenny Fleiss, co-founder of Rent the Runway, and Guilt Group and Glam Squad founder Alexandra Wilkes Wilson all have in common? They're all entrepreneurs, of course. They also went to Harvard Business School, but they have something else in common.
Well, and they were once ahead of startups that became so much more, right? They're also all featured in a new book written by two startup founders and angel investors. The book is called Smart Startups, What Every Entrepreneur Needs to Know, advice from 18 Harvard Business School founders. And we've got the authors of the book here. Catalina Daniels, venture partner at Entrepreneurs Roundtable Accelerator, and James Sherman, angel investor and entrepreneur, here both in our Bloomberg Interactive Broker studio. Welcome, welcome. Congratulations on the book. My guess is your world, you're constantly thinking about the startup community in terms of what you do at Harvard.
Well, in terms of thinking about the community, yes, because we've both been startup founders ourselves, actually. So myself, with having launched or exited 3 different companies, Catalina as well. And we came together, I guess about 6 years ago. We were classmates at HBS, but we came together to write this book, really because we wanted to impart our own wisdom from having spent time as entrepreneurs. But we also thought it would be super special to write the book including many other HBS founders of companies and to learn about the collective wisdom that they bring to bear as well.
Well, and maybe by saying at Harvard, I meant what is it about, what's the secret sauce? Because we've gone to a lot of business schools, done broadcasts, and there is something about certain environments that are just ripe for entrepreneurship. Is that fair to say that?
Yes. I mean, you mean at business school, what the secret sauce is? I think it all starts with, admission, the type of people that they admit to the school. Harvard Business School is now doing a great job in terms of entrepreneurship. I mean, has a huge number of unicorn founders, huge number of founders in general. To be an entrepreneur, to be a founder, you need to have a certain personality. You need to be resilient. You need to show passion. You need to be willing to go for it. And I think it all starts with the admission, admitting people that have these traits. That's one thing. But then, there's so many courses at business school taught by wonderful professors that probably, we were studying at a time that there were only 2 entrepreneurship classes, so we missed out on quite a lot.
It's probably a lot different now.
It's
50,
dozens.
Is there really?
Yeah. And wonderful professors. You must know that business school, the Harvard Business School, is based on a case study method.
We mention it all the time.
So, there is something between recruiting the right people, putting them in front of the right people, talking about the right topics that should inspire these people to basically go out, do something, and become successful.
We're going to talk about those successful people and some of the companies they've started and the commonality. We're going to come back, continue talking on Smart Startups. It's a new book right here on Bloomberg. I want to get back to the authors of a new book, Tim.
Yeah, Catalina Daniels and James Sherman. They are the co-authors of Smart Startups, What Every Entrepreneur Needs to Know, advice from 18 Harvard Business School founders. They're here in our Bloomberg Interactive Brokers studio. James, I want to just ask you the question that I think you probably get a lot, which is a lot of entrepreneurs would sort of scoff at the idea of even going to business school. They say, we don't need to go to business school. I mean, look at some of the most prominent entrepreneurs out there today. Mark Zuckerberg dropped out of Harvard, didn't go to graduate school. Bezos did not go to get an MBA. What would you say to those folks?
Well, I'd say that you certainly can be successful if you don't go to business school, and you've mentioned a few great names of people that became huge successes. So you don't have to go to business school to be a successful startup founder, but I think you're going to increase your odds of success if you do, especially these days at the school where they've got a tremendously robust set of courses around entrepreneurship. So you will learn fundamentals, you will learn frameworks, you will learn through the case study method, successes and failures, and I think that can only help and improve your odds of success. And by the way, that's very important because the fact is 70% of seeded startups are going to fail. 70%. So keep that in mind.
The odds are not with you.
Yeah, exactly. So you improve the odds as best you can.
Yeah, no, it's interesting that you say that. Catalina, come on back in. As you guys worked on putting this book, what was it that kind of stuck out for you or stood out for you in terms of the individuals you profiled, the businesses you profiled, the entrepreneurs that you profiled?
Well, many things, actually, and we don't have that much time, so I'm not going to mention everything, but a couple of things stood out. For example, there is this myth within the entrepreneurial ecosystem that you need to have a certain team to start with.
Yeah.
Not go for it alone, but have 2 or 3 co-founders, a CEO, CTO, a CMO, or a COO.
I would say no, no, and no. Is that true, or do you need it?
Well, I mean, you can need it, but you don't have to. What I mean by that is what came out of our research and our interviews is multiple models can work. And there is no myth about the twosome or the threesome. We had multiple solo founders. We had a team of 5 recruited by headhunters, or by one headhunter. We had a mom and her son. We had a married couple. We had best friends. So this was a bit of a surprise because as an angel investor, you are in the middle of all these discussions. Should we invest in that team or not?
Right.
Well, I mean, they don't have a CTO or he or she is alone. Well, I mean, look at these cases. It was all over the place. So that's one example. There are multiple examples. I think that's why the book is interesting. Jim and I started with an idea of what we would write about because we've both been entrepreneurs. We're angel investors.
Right.
We operate in the tech ecosystem. But I can assure you that the result is different than what we had in mind when we started.
Jim, come on in.
Well, as Catalina was beginning to give you just one example of some surprises that we had not expected, I mean, another one, if I were to think of it, would be how creative people were in validating the demand for their service before raising money.
Right.
Or anything material in terms of fundraising. And that was really impressive with how creative they were in coming up with ways to validate that consumers or businesses would be interested in their product or service. So, for example, Rent the Runway, which everyone knows today, a very successful company, public company, rental of dresses. The way they began to prove that model was not even putting up a website. They actually did pop-up stores at several college campuses to demonstrate that women were interested, not only interested in renting the dresses, but were passionate with this opportunity. And they videotaped it further so that they could document that passion, which was very impressive when they then presented those findings to venture capitalists later. So these kinds of creative methods to validate the demand was something that really surprised us.
I do, forgive me, but I have to push back a little bit with a couple of the examples in the book, just because, sometimes they enter their life as a public company and things don't necessarily go totally as planned. Shares of Rent the Runway have plummeted this year. It's been tough since the IPO. Blue Apron, I mean, I was there at the New York Stock Exchange when the company went public. It's a shadow of its former self today. I mean, it's got an $83 million market cap. Talk to me a little bit about how things are there's still speed bumps after, quote unquote, successful exit.
I mean, to be fair, we don't cover what happened after the exits for the companies. We don't get into that because when there's the exit, we do analyze whether we think it might have been successful or not, right? If it was a fire sale exit and investors didn't get their money back, that's one scenario. If there's an exit where everyone did get a return, that's something else. But we actually don't attempt to cover what happened years later after going public in this case.
But I do wonder, as like venture capitalists, when you guys are looking at offers or ideas that are out there, an entrepreneur comes to you, can you tell the difference between something that may have some legs, may go public, but you don't know if it'll be a longer term play versus something you're like, okay, this is transformative? Do you know as a venture capitalist, and I know you guys play at a different part of the spectrum and a lot of ideas go out there.
Yeah. So just to be clear, we're angels, which is
very early,
VC,
very early.
So you really don't know, basically.
Right.
I mean, but You need to look at a couple of things.
Which you're willing to throw, right? Because it's not always a ton of money, right? But willing to invest in a bunch because they're early startups.
But so the
Very
model
early.
is, or the way you think about it is this a team that has some of the traits we talked about 2 minutes ago, the passion, the resilience, etc. As a founder, I mean, there are a lot of things you don't control. So the very first thing is you invest in a team.
How can you tell that about a team, though, just by meeting people?
I feel like it's like when you.
That's so tough.
I don't know if you ever I had to try out to be an RA, and they actually had us do like this team dynamic, and that was such a big part of the interview to see how we interacted, who was the boss. But I'm wondering how you guys do it.
Well, I mean, I don't know if we've got the answer, but basically you look at.
Will you invest if you don't like them?
I don't invest if I. Well, maybe sometimes that's
No.
Well,
No.
that's something else. I mean, you don't need to be best friends with the people.
I don't have
you
to
invest.
like my doctor, but if I know they're good, I'm good.
Exactly,
I'm good with it.
But there is something within the investor community where you know that some investors have a nose for good startups, etc. And we talk about that in the book. There is this set the dominoes thing. I mean, if you find a good investor that invests in you, maybe other ones will follow. They might not be in love with you as a person, but they might look at somebody else that has done very good investments in the past and think, okay, this is a good opportunity. I'm not in love with the person or the people pushing the opportunity, but it's a good opportunity. It's a good time.
You get what they're trying to do.
A set of good investors, and you could do it, I think.
Jim, did you go ahead, Jim? Jump
I think
in.
no. I was just going to add that I think a lot of times people, as angel investors or VCs, talk about founder fit. Are they a right fit for the opportunity? And you have to be very careful as well about founders who are practical and charismatic and can sell a vision and a story. Because, by the way, they are the chief sales officer, but not just in closing sales. In terms of hiring, in getting partners, getting suppliers, they're constantly out there selling the vision and moving things along.
And it has to be part of the job, right?
And that has as part and parcel of the job, but they can't be delusional as well. They can't be delusional, and because investors can sniff that, and they can't be annoying because if people are going to have to want to work for this founder. So that's really I've seen many things blow up.
Which makes you wonder about Sam Bankman-Fried. I was just like, we're running out of time, but you wonder about these individuals who attract a ton of investor money really quickly. Just quickly.
Yes. They're like the Adam Newmans of the world. And
But just to name a number, the 18 founders that we interviewed raised $1.7 billion at time of writing.
So they obviously
so whatever measure you use,
and
they're
many
successful.
made it, and some didn't, and we talk about both.
Well, it's very interesting. It's called Smart Startups: What Every Entrepreneur Needs to Know. Advice from 18 Harvard Business School founders, Catalina Daniels and James Sherman. They are the co-authors.